Are you thinking about investing in real estate and you're curious about how to evaluate the value of a property or the return you're going to get? Well, today in this video, we're going to discuss two key indicators on assessing the value of a property and also the profitability. Those are called cap rate and gross rent multiplier, which we also call GRM. First one I'm going to start off with is cap rate. So how do you figure out cap rate? First thing you're going to need is the net operating income. And the way you determine that is basically you take the gross rent and you subtract out the expenses. And that's going to get you the net operating income. And then so you divide that into the value of the property. And let's say you have a $1 million property and the net operating income is $50,000. Well, then your cap rate is 5% on that $1 million. So that's the cap rate of the property. If it was $40,000, it'd be 4%. So the higher the cap rate, the more net operating income that you're getting in relation to the value of the property, the better the return is on the property. Now, there are some times where cap rate doesn't always work, doesn't come into play, and that is, sometimes it's usually on smaller properties where expenses aren't quite as accurate. Just people may not have taken good records. There may be reasons that it's just not accurate on the expenses. So that's going to throw off your cap rate. So you are going to have to kind of figure that into play. You can estimate your own expenses. You can try to get information from them, but that's what you're going to run into a little bit on cap rate. Now, what you can do, the way you would evaluate a property and see if something is, the price is right on that property is you'd want to look at what is the cap rate for other properties in that area. And if that's the case, and you can determine the net operating income, then you can actually back into what that property is probably worth, what that property might be worth if you're able to raise income, lower expenses. There's a lot of things you can do if you know that cap rate, if you know the net operating income, in order to determine what the property may be worth, if you're going to be making an offer, or what value you may be able to add to it. Okay, so now let's talk about gross rent multiplier. So the name is right, it's in the name, what you use, gross rent. So this is what basically you're taking the gross rent and the value of the property, and you're dividing that gross rent into the value. So now instead of the net operating income, that's $50,000, you might have gross rent of $100,000. And so you divide that into the $1 million property, $1 million valuation, and that gross rent multiplier is a 10. It's actually low for a lot of the properties here locally where we are, but it depends on where you're looking. So what you can do then is you have the gross rent multiplier. Again, if you know what the gross income is, you know what the GRM, we call gross rent multiplier, or the gross ratio multiplier, what that is in that area, then you can look at what the gross income is, and that will give you an idea of what the property is probably worth. So if the gross rent multiplier in that area is not 10, if it's 20, and you take that $100,000 in gross income and you multiply it by 20, now you're looking at a $2 million property, not a $1 million property. So something that's a gross, it's 100,000 in income and it's the gross in the area is a 10, but someone's asking 1.5, 2 million, you know it's going to be overpriced. Now, it's not an exact number, but it gets you in the right ballpark for you to say, okay, yeah, this is in the right range, and let's take a closer look at it and really dive into the numbers and analyze it. So anyway, hope that was helpful. Those are two indicators, two of the main ones that we use on determining value for income property. So if you have any other questions, I'm happy to talk and go into those a little bit deeper, but that at least gives you a little bit of an idea of a couple ways that you can evaluate a property. All right, thanks a lot.